A very good evening to everybody. Wow, Will, yeah, I haven't seen you for a long time, Will. And Yok Ching, good to see you. WS, good to see you. EDC, good to see you too. Very good evening to everybody. We'll do a quick live stream because I got a bowl of soup going to be waiting for me. And Richard, good evening to you. Okay. And this morning I wake up very early for my exam, so yeah, so I want to take advantage. Just this window of time, quickly update everybody on what I see is a clear and present trend, and I want to highlight to everybody where the opportunities are. Okay. Derek, good to see you. Hui Hui, good to see you. Charlie, good to see you. JS, good to see you. Gary, good to see you. Very good to see every one of you. Hui Hui. Okay. Wilson, TNT man. Wow. Okay. Dream, good to see you too. Yeah. Okay. So I better take. Okay. So the. Okay. I better catch the top 5 people. Okay. And. Okay. The top 5 people is Will, Yuk Ching, WS, EDC. I suspect, Richard, you already got the tickets already, right? I'm not too sure. If you haven't got the tickets, you can write to, write to Jermaine at premiummall.sg and she will give you a pair of free tickets sponsored by Singtel to Heritage Center, something like that. Okay. Yeah. So I say again, it's Will, Yuk Ching, WS, EDC, and Richard. Okay. Yeah. And if any one of you already have it, then we'll give it to Korean Craze. Okay. Yeah. So you'll just write to Jermaine at Premium Mall. Yeah, you know what? Korean Craze, you can write in also. Okay. Yeah. So I'll make sure that you get it as well. Okay. What's this? So I'm gonna write to. Okay. Also give to Korean Craze. Okay. Yeah. Thank you everybody for coming in. Thank you everybody for coming in. Okay. Okay. Richard, have it. Okay. That Korean Craze. Okay. Yeah. So everybody, very good evening. I want to give a quick update. By the way, you see my hair. I just got a haircut. Thank you. Okay. I went to a Malaysian hairdresser, and the Malaysian hairdresser cut my hair. Guess how much is it? Anybody? Guess how much is it? Okay, just cut today only. Okay, it was a simple hairdresser, not those sophisticated high-end one. Simple, but not mama store. Just guess how much is it in ringgit lah? In ringgit, just guess how much is it? Okay, in ringgit. 12. This is a hairdresser. Okay, I spent 22 ringgit. Okay, 22 ringgit now. It is a 22 ringgit. So not bad lah, I would say. Singapore, I think my usual hairdresser will charge me 18 to 20. I can't remember. So I think the price. Okay. I would prefer to my hair be cut by my usual hairdresser. I really have no time. So I 随便 just went into a hairdresser. So cost of living for services in Malaysia is very good. Okay, it's very good. It's one of those things that really, okay, that really saves you money. Okay, I want to quickly talk about 2 things. Number one, let's talk about the important thing first, which is the financial market. Okay, so let's quickly go to the financial market right now. Share screen window. Okay, and right now, okay, let's take a look at the stock market right now. The S&P 500 is at 6,747, just a stone throw away from the all-time high. I suspect you will break all-time high soon. Okay. This Tom Lee seems adamant that you will cross 7,000. We shall see. If we cross 7,000, I might rebalance again. Okay. And by the way, Kelu, have you rebalanced your portfolio?
No.
Check with your, huh?
When you tell me.
You better check your brother whether you should rebalance your portfolio. Okay. And then the Nasdaq is also a stone throw away from the all-time high as well. Okay. And of course, the Nasdaq has gone up like phenomenally. You can see, right? But the topic of the day isn't about the Nasdaq S&P 500. It's about the bonds, especially long-term bonds. Huh? So the long-term bonds hit a low of 84 for TLT. It has been going up. Now it's 92 already, okay? And I don't know whether you'll go up some more. Better don't say, but I don't think I catch this bottom here, but I think around 80 plus here, I caught somewhere around here, okay? Yeah, caught somewhere around here and then somewhere around here as well. Okay, let's see. Yeah, so somewhere around here, caught somewhere here, caught some, anyway, messy. This, yeah, but I think in a 1 year, it has gone as high as, it came down from 160 all the way down. Okay, see? So someone can say that, wow, the sky's the limit for this one, right? So I don't know. I'm better don't say later. Yeah, but I use this as an index for long-term bonds. Okay, yeah. So we are. If you look at the past 20 years, past 20 over years, these bonds have gone up very high and then come down crashing. So maybe there's something there. But I use this for rebalancing. And the PIMCO funds, I use this as an index, have gone up as well. Can you see? Maybe let's take we look at 6 months. Yeah, I think the PIMCO one I already got it for. It has gone up as well. Can you see? Very healthy increase. Okay, if you look at the the trend, do you mind giving me a tissue, please? Yeah. Okay, so you can see, right? So bonds are, excuse me, so bonds are going up. For those people who have rebalanced those people have rebalanced to bonds, I think it's a very healthy rebalance. So bonds and equities generally move in different direction, but I use it to cushion effect. But this time around, it sometimes go in the same direction whenever it's driven by the cut in interest rate or the imminent cut in interest rate. So I think it's a very healthy sign. Okay, and I think they are a great, a typical classical portfolio management will say that you either hold bonds or stocks. Okay, and then you should have a healthy spread of both. So I'm going back to textbooks. Okay, so I spread out also my bonds ETF. So I think it's a very healthy sign. For those people who are riding on the wave of the stocks, do think about rebalancing. The distribution between bonds and equities highly depend on the individual, your stage of life, and what you aspire in your life and so on. So I tend to take maybe a 70-30. Okay, hello. I take a 7:30.
Bye. Good
Okay.
night.
Thank you. Okay. All right. Say bye-bye to everybody.
Bye, everybody. I'm gonna sleep so that I can work for Christopher Tan tomorrow.
Okay. Okay. So I think it's a wonderful. It's really a wonderful. It's a wonderful cushion to each other. Huh? Okay. Oh, gold crashed massively. How much did gold crash by?
Apparently more than 2%.
2%. Let me see the news. What's okay? So right now it's close to 4,000. Wait, 4,200. Let me check a spot gold price. Spot gold is down phenomenally, man. 4.76%. That's quite a lot in 1 day, right? Okay, let me see. Is it 1 day? Wow, it is a lot in 1 day. Okay, it is a lot in one day. Good. I need to buy some gold because I got you. Okay, I cannot find a gold chain long enough for those people who joined me earlier. I I have to replace this black thing which is very unauspicious to my very unauspicious to my dad. So I got to replace it with a gold chain. And just now I cannot find something along. My came until here, and so it very uncomfortable. So after thinking, I need one. How long do I need? 65 cm. I need 66 cm. It's not easy to find, is it? Not easy to find. Okay. Anyway, well, I'll try to find. Okay. So I need to find a chain for this device. Okay. Meanwhile, I hide my string. Later you see it, you get angry at me. Okay. Yes. So the key message is this: nothing goes up forever without huge volatility. So gold prices go up, come down, but I think in the long run gold will still go up. Okay. Do you rebalance your CPF Amandi? Okay, so when I look at Amandi, I look at under the portfolio called the globally diversified index. Okay, so you think about it this way. Yeah. Let's say I have a whole portfolio of equities and a whole portfolio of stocks. Okay, so if the equities go up by a lot, go up by a lot, then I'll pare it down. Okay, now where I pare it down, I seldom touch the CPF one, but I will pare down the cash part and rebalance to bonds or to other asset or whatsoever. When gold and silver go down, silver also go down. I'm very sure about that. Gold go up, silver also go up. They tend to move generally the same direction, but with maybe some lags. Okay. Yes. So I think for those, it's very healthy as a portfolio management. Number one, to diversify across many assets. Number two, to rebalance your portfolio. It is like investment kung fu 101. And if you are not having a rebalancing, if you don't have rebalancing as a strategy, then something you are not following investment 101 philosophy. Maybe that's the right way to say. Okay, thank you, Kelly. Okay, so you need to understand that in investment theory, number one, you should have a diversification of portfolio. Number two, regularly rebalance. Okay, very important. Know that this is very important. Okay, yeah, know that this is very important to have both. Okay. Okay. Any quick question on this? I got a bowl of soup waiting for me. I just want to say that I think those people who have rebalanced, I think you have done well. Congratulations. But those people who are riding on the bull runs and not rebalance, okay, maybe you go ask ChatGPT whether rebalancing is a good theory. Hey, you know what? Why don't we ask ChatGPT? Okay, because Mr. Lu say you all don't believe. Yeah. Okay. Shall we ask? Okay. Even if Tom Lee prediction will come true, it's also a good thing to rebalance. Okay. Yeah. So let me ask ChatGPT. Okay. So hi there. Can you hear me?
I can hear you loud and clear. Feel free to let me know what you need, and I'm here to help.
I want you to take on the persona of a investment guru in the lights of Warren Buffett, Charlie Munger, and Peter Lynch, in the lights of them. And I want to ask you some questions on financial markets 101.
Absolutely. I can put on my investment guru hat for you. Imagine me channeling a blend of Buffett's long-term wisdom, Munger's straight-shooting logic, and a bit of Peter Lynch's knack for spotting what you know. So go ahead, ask me anything about Financial Markets 101, and I'll try to answer in that spirit.
So right now, the S&P 500 and NASDAQ has been going on this insane bull run that is going higher and higher and higher. Can you advise us whether we should follow classic financial theory of rebalancing into bonds and other uncorrelated assets?
Absolutely. Stepping into that guru mindset here. So if we channel a bit of Buffett and Munger's vibe, they probably remind us that nobody ever went broke, taking a bit of profit and rebalancing thoughtfully. Even Peter Lynch would say, know what you own and why you own it. And if you've had a massive run up in equities, it's not unwise to think about diversifying a little into bonds or other assets that weren't moving in lockstep. In other words, classic financial theory of rebalancing is kind of time was for a reason. It's just about making sure your risk is balanced and you're not overexposed if things go south. So yep, a little rebalancing can definitely be a wise move.
So the market looks like it's going to experience some bonds volatility because Jerome Powell, the Federal Reserve Chairman, is going to potentially cut his interest rate. What will the likely impact in classic economic theory when interest rates are cut? What will happen to bond prices, especially the long-term bonds?
Absolutely. Let's keep that guru hat on. So if we look at classic economic theory and what someone like a Munger or a Buffett might say when Jerome Powell or the Fed cuts interest rates, bond prices, especially those long-term bonds, tend to go up. That's just the inverse relationship at play. When yields fall, existing bonds with higher rates become more valuable. So from a classic perspective, rate cuts are usually a tailwind for bond prices. Long-term bonds in particular could see some price appreciation because investors know that future yields are likely going to be lower. It's a pretty standard playbook: lower rates, higher bond prices. So if you're watching that market scenario unfold, that's the likely impact.
Very good. Thank you so much. You are very nice.
You're very welcome. I'm glad that was helpful and that you enjoyed the little guru persona. If you've got any more questions or need a different perspective, just let me know.
Okay. So what I say is your belief is classic economic theory 101. It's not Mr. Lu Hao Xiaology. You go to standard economic school, they will teach you this, okay? Yeah, class 1. Can you give me a cup of ice, please? Yeah, thank you. Okay, then you cover up this up first. Okay, so by the way, I didn't wear the gold chain because just now the gold chain was too short. So Taka Jewelry is trying to hunt for me a longer gold chain. So I'm still waiting for the longer gold chain, okay? Yeah. If you feel the S&P 500 will hit 7,000, should you wait until it hits 7,000 before rebalance? What makes you think that the 7,000 will be a certainty, right? In the world of stock market, is a probabilistic world. It's not a deterministic world. Many of you live in the world of black and white. You gotta wipe that philosophy off your mind. We do not live in a world of deterministic outcomes. We live in a world of probabilistic outcome. Because it is probabilistic, therefore, you need to handle things probabilistically. Okay, does this sound very chim to you? In short, S&P 500 most likely will hit 7,000, but maybe it will not hit 7,000. So because of that maybe, what's wrong with me taking some and rebalance to other assets, which I know will have a gentle upslope? You heard just now from the experts, right? Okay, you did not hear from ChatGPT. You heard it from Charlie Munger, Warren Buffett, and Peter Lynch. Okay, so it is very important. Now, let me also share with you, when you tell an AI to perform a task for you, you cannot just say, do this for me. You got to give the AI a context. The context is you are now what. do this job for me. Okay, that's kind of thinking, right? So gold is crashing. How? Buy more. Yeah. Okay. Yeah. So I think whoever, yeah. So gold is something. If I always say, right, there is aesthetic value. There's aesthetic value, and there is a long-term appreciation value, and you just gotta ride it through. If S&P 500 crash, what should be a strategy from 50-50, 70-30? Oh, okay. Okay. Let me give you again classic economic theory. Let's say you are Daniel. How old are you? May I have asked? Then you use yourself. Okay. Some people 70-30, some people 50-50, some people 30-70, some people 80-20. It really depends on yourself. So I generally like to hold a lot more equities because I'm a lot more gutsy. I got a lot more financial safety net. So I generally like to take a 70-30 position. That means 70 equity, 30% bond. Let's say that you're 46, okay? So you're still young. Maybe you can consider 70-30, 60-40, closer to equity, but you also depend how much safety net you have. So right now, let's say I take a 70-30 position, but the equities go up to 80-20. Then the classic economic theory says that you rebalance to 70-30. Okay, you sell stocks, buy bonds, right? That's the philosophy of it now. So I think this one is something that it's classic economic theory. It's not house sell. Just now I really pull out ChatGPT and taught you already, right? It's not house sell logic. It's really economic theory. Okay. Mr. Lu, what's your opinion of Zion Bank loan debunker that caused to be a shock? I don't even think there was much of a shock. First of all, these are very small banks, so I don't think it's serious. So I wouldn't think too much about it. But however, if it spill over to the big banks, oh man, that's a very different story. Yeah. Okay. Okay, so good opportunity, short gold forex. Gold and forex are two different things. Yeah, there's no such thing as gold forex. Okay, yeah, I mean you can short gold, you can short forex, but you cannot short both. Okay, since gold crashed today, is it a good idea to rebalance some of the gold? Wow, I cannot tell you that also, man. So okay, so let's say, okay, you know who has this? What's the guy's name? Ray Dalio. Ray Dalio has this thing called all-weather portfolio. He puts some into bonds, some into stocks, some into commodities, some into gold, some into silver, some into tin commodity, that kind of thing, right? It's spread all around, right? But most of us investors don't have such big a spread. Most don't have such big a spread. So therefore, most of us will take a few positions. You can take a very small. Even Mr. Lu also don't buy gold. BE Mrs. Lu buy gold, okay, but she buy a lot of gold for aesthetic value whatsoever. Today I want to buy gold is because my father was quite upset at me over this black string. Okay, look very unauspicious. Yeah, so buy maybe a thin gold one, doesn't cost that much. Yeah, MAS will offer me some coffee if I tell you yes. Okay, no, I think generally speaking, rebalancing across uncorrelated asset is not a bad idea. Okay, yeah, but you must prefix where your asset percentages are first, right? If not, you don't have a true north to work towards. Okay, yeah. So any other questions? Anybody? Okay. So let me say again, it's a very healthy phenomena that the bonds are going up, and therefore the rebalancing strategy is working. Do you include your CPF and SRS in your equities and fixed income allocation? No, I don't. My equities, those equities that I use CPF to buy, yes, I put them in. Your SRS that I used to buy equities, I put them in the calculations. But let's say raw cash, raw raw CPF sitting in my OA, SA and MA. I don't put them in the allocation. They are my financial safety net. Okay. Yeah. Any other questions? Very important. Okay. There's no right or wrong. 70, 30, 80, 20, 90, 10, no wrong. I think 70, 30 is pretty aggressive already. A bit heavy weighted already. Why not wear your old Singtel lanyard? The colors you got switches. I don't even think I still have it. Yeah. I don't even think I still have it. Actually, that's a good idea. Wait a minute. This thing cannot put on lanyard. I don't think this thing can put on lanyard. It's a kiap one. Yeah. I don't think I put on lanyard. Okay. Yeah. Any other questions? I think the market trends are the markets are right now having some adjustments. What am I wearing? Oh, this is an AI. This is an AI recorder of all my conversations. Okay, and you will tell me what has happened throughout the whole day, and more importantly, remind me what I need to do. Any thesis or precious metal crash? I don't know, man. I don't know how to judge gold. Yeah. So I think gold is something very difficult to judge. I did a video on gold. This is my best guess of where the gold is thinking. Yeah, it's a live record in a sense. Okay. Any other question? Any more questions? Now 3 minutes, I'll hang up so that I can go and have my soup. Then after I need to go for a walk. Yeah, today I have yesterday night I slept at 2:30 or so. Then after that, I this morning wake up at 8 to prepare myself for a test and assessment. Okay. This theory of whatever goes up must come down does not apply to a lot of things. Don't apply it to many things. Okay. This one has killed many people, especially those people who, if you buy the right asset, okay, over a long duration, you'll go up. For example, gold, right? Over 5,000 years, you're going up. Your S&P fund over the last 100 years and go up. NASDAQ over the last 50 years and going up. But if you buy individual stock, then it can crash and never recover. Okay. I cannot tell whether to buy gold or not. Okay. No, I don't believe in buying gold ETF. In fact, I don't even believe in buying gold for investment sake. I like to buy gold. Now I can appreciate. I buy gold. I don't buy gold. My wife buy gold for for aesthetic value, and it's a few shop. Okay. Yeah. So I don't know how many of you are going to buy gold for investment. I mean, if you want to hold it for a very long period of time, and that's perfectly fine. But what you don't want is to hold gold. Okay. What I don't believe is buying paper gold. Those PAM gold, paper gold. You want to have some aesthetic value of it. Okay. Leverage is not double-edged. Leverage is a weapon of mass destruction. Okay. It's very dangerous. Yeah. I think gold will, frankly speaking, if I make a guess, gold will still go up because China is buying a lot of gold. They are throwing their US Treasury to buy gold. I promote Taka gold as an aesthetic value, and if you hold for a long period of time, you will still go up. That I still believe. Okay, yeah. But if you buy, let's say, buy in the hope that 1 month later you can sell, okay, for make a profit, I think that's too dangerous. Okay. No, aesthetic gold doesn't lose value. Yeah, doesn't lose value. That is not true. That is not true. Okay. PAM gold, okay. PAM gold is you cannot take out and touch. You cannot wear it. You hold like that. If you take out the casing, accidentally scratch one line, the PAM gold got a lot less value already. Okay. Yeah. No workmanship. No $10. Yeah, $10 less than 5%. I don't think it's a lot for workmanship. Yeah. Okay. Does crash apply to gold? the one I cannot tell. Gold is, I'm not an expert with gold, okay? So I better don't comment. A lot of people want to, but if you want to buy gold for aesthetic value and preservation of value and long term, you can pass to your daughters, your daughter-in-law, whatever, which is what B does. Her mom passed away many years ago already. Her mom passed my wife some gold chain and some gold chain and some bracelet or earring, I can't remember, okay? She kept it until now, no? Those days, I don't know, gold must be $10 a gram or something like that. Okay, now it's gone up 10 times or something like that. Even with workmanship or trade-in value, I said, you still make a lot of money, but it has got amazing sentimental value, right? If S&P 500 hits 7,000, do you foresee a crash coming? Crash do not come simply because the stock market is high. Crash come because there is a trigger, okay? And I cannot predict a trigger. Yes, okay, but you cannot see that way. When you sell back the jewelry, yes, it's lesser than let's say PAM Gold, because number one, PAM Gold don't have GST, okay, and some adjustment. But PAM, you don't understand one thing. When you buy gold jewelry, you got aesthetic value. You wear, you feel shock, right? Let's say I'm trying to think. Let's say this is let's say this T-shirt I buy, right? I wear, very nice aesthetic value, comfort value. I feel shock. Like 1 year later, 2 years later, I throw this away. But gold, you won't throw away. It's got preservation of value. You understand? This one, ladies will understand. You buy gold, you get joy out of it. Okay, so that's the different thing. Yeah. But if you want to invest in gold, okay, I don't know how to judge whether gold is going up or not. That I really can't. I really cannot cannot gauge. This period of quarterly earning reporting seems all good so far. Okay, I didn't see any bad. Buy gold Rolex watch. Rolex is another one big myth. Rolex, Hermes. It's this BS that you always go up. That's not true. Okay, unless you keep it, don't touch it, don't use it. The minute you use it, the value goes down straight away. Yeah. Okay. Yeah, you buy a Rolex watch. Okay. People say no, preserve value, utter rubbish. You walk around, one lobang, right? Man for sure scratch the whole thing one. Like then then you got to repolish the whole thing and that kind of thing. So Birkin, same thing. You hold it and use it, the value goes down. But unless you maybe have those rare pieces like the crocodile skin one, those with diamond studded one, that's a different. Yeah. ETF gold, I know no interest in that. Do you recommend? Sorry, tell my cat. Would you recommend gold from Singapore Mint? I don't. Okay, I don't like to buy paper gold. I don't like to buy non-aesthetic gold because I ever hold 1 kilo of gold in my hand before. I feel damn shook. Very shook. But after that, what are you gonna do with the gold? Want to buy your car and use it instead of buy gold? I agree. Okay, I agree. Yeah. Invest in cat. Yeah. This cat is Rolex basic for those who want to show off. Yeah. I mean, this is my Rolex. Okay, this is my Rolex. And today I'm gonna miss my 15,000 steps. Okay. So I better end now so I can clock another 10 minutes. Okay. Okay, thank you everybody for joining me. A quick live stream. Did I try to scratch a 1K? It's not mine. Yeah, it's not mine. The goldsmith one. Yeah, pure gold last time. I hold in my hand. Okay, one of those gold $200,000. You know. Have you seen Aaron learn investing? No, I don't know who is he. Can he really retire 600K at 29? 600K can retire? You must be joking, man. Yeah. Okay. Yes. Yeah. Okay. Thank you everybody for watching. I will see you tomorrow. Okay. All right. Okay. Goodbye. Goodbye. Okay. Goodbye. I go for my walk right now. Bye bye.